Hi guys, welcome back. In today's video, we'll be covering the Q4FY24 results of two companies, Thyrocare Technologies and Dr. Lal Patlabs. As you see, both of them are in the diagnostic space, so we will be covering both con call as well as PPT. And how does the scope look like for the entire diagnostic space? There are two other companies over here. One is Metropolis and the other one is Krishna Diagnostics. The result hasn't come out for both of them. So once unka result aaye, we can do a P2P, among all the four. But for now, we will stick to both. One is Thyrocare and the other one is Dr. Lal Patlabs. Now, first we need to understand the demand, right? Like we need to see, how is the demand for this entire diagnostic space? Because if you remember, there was a time in 2020, where, the company ka sales were growing at a very fast pace, very rapid pace. Because that was a time, right, when you had this COVID and, everybody had to get that COVID testing done. If they were stepping outside the house, if they were going for a small vacation, anything and everything required, anywhere you had to go, you had to show that, the COVID test, you are negative in terms of COVID, right? So that gave a lot of boom. Then came a time, where this entire thing, because you had such a high base effect because of this COVID test in a year, in 2020 and 2021, we saw, the pace of growth that is there came down. And, I wouldn't say pace of growth came down, but, the base started normalizing. I would say that is a much better word. The base started normalizing again, right? And now we see again that the demand is back up. Like we see a very good and healthy demand over here. Okay. And even if you look at the entire healthcare segment, right, you have the pharmacy, you have the hospitals, you have the diagnostics, you see that the diagnostic space is the one that is growing at a very fast rate compared to any other space in the healthcare sector. And if you look at the diagnostic space, right, it is growing at 8 to 10% ka CAGR in that range. So obviously these companies that are there should grow faster than that, or at least around the similar rate, right? So that is the entire thing. Now over here also with this diagnostic space, you see a lot of demand when from an unorganized space, when or you can tell there is a shift happening from an unorganized space to organized space. Similarly, like how we've seen in jewelry, how there has been a shift from unorganized to organized. Similarly, even in the diagnostic space. But this over here is coming because of two things, right? Like it's not because there is some sort of regulations or anything like how we have in jewelry space, but here it is coming due to the customer experience and the ease, right? I'll just take an example. I'll take my very own example. Like I do get blood test done, like once in 6 months, just the casual blood test to just to check if everything is all right or not. And there is this ease of mind knowing that going with a trusted value chain like Tata 1mg, Apollo and everything, because one, it comes with a brand, so that makes it easier to trust. Second is the convenience that it offers, right? Like people come to your house, take your blood test and go, and then after that, after a period of time, probably 4 hours, maximum 24 hours, you've got the result, right? And you have one app, and you could be there from anywhere in India. You could be in Calcutta, you could be in Bangalore or Goa, you can get the test done, right? So this affordability, the convenience that it offers, and obviously the fact that you can trust, that there isn't going to be a mishap in terms of your results, right, that you obtain. I think there is a all of this makes it move from that unorganized space to organized space. Think about it. Now earlier you have to go find a lab, and then you have to go to a hospital, use their their diagnostic center, wait the entire day. But now you get everything on phone, just one tap on the phone. You don't even have to step outside the house. And this is the advantage I would say the organized sector have, because they've created a chain among themselves where the entire process, the entire transaction is so seamless, so smooth, that is there. Okay, so I would say this is more or less in terms of demand, in terms of like how the shift is happening, and why these organized chains such as Thyrocare and Dr. Lal Patlabs can see the can see the effect. And also, right, in terms of COVID, this just propagated into a wider audience, because that time I think earlier people were not getting the test done so often, but it just brought that convenience, where the phlebotomist comes to your home and does everything. I think that's that. Okay, so first we'll start and understand Thyrocare Technologies. Now when you look at Thyrocare Technologies and Dr. Lal Patlabs, there isn't much difference in terms of the business model. Okay, both are catering, both have their own networks, they have a franchise network. I would say the main difference over here is, the areas that they operate. Like if you look at Dr. Lal Patlabs, they have 31% of the revenue coming from that Delhi NCR region, okay, and they're not that concentrated in the western part of India or northeastern part of India. So similarly, if you look at Thyrocare Technologies, they have a bit more wider presence. I would say they're not really concentrated in one particular area like how Dr. Lal Patlabs is. So this is one of the, I would tell you, like primary difference, where they're concentrated. The geography is the primary difference. Okay, the if you look at Thyrocare over here, if you look at Thyrocare, right? So first of all, iska sales agar aap dekhte ho, sales grew by 21% on a year-on-year basis. If you look at the profit before tax, it's almost doubled. I wouldn't check the PAT because in terms of PAT, there is a one-time deferred tax that has been paid. Because of that, it might look, it might look as if, not much operating leverage is available over there. So be careful whenever you're checking the income statement. Always make sure to check, check the exceptional item, check for any other, in terms of taxes also, like, if there is a one-time gain or if there's a deferred tax of any kind, because that can make the PAT or the EPS growth look very skewed than what it usually is. Okay, so this is that. Now over here, if you look at them, even the franchise network that is there, even that grew. The revenues from here also grew 18% on a year-on-year basis. Now, whenever you talk about a diagnostic space, there are two things that are important. One is the number of tests performed, right? This gives you an idea of what the volume growth is like. And the other one is average revenue per patient, which is more like a value growth. Similarly, like how we have in hospital occupancy and RPOP, which is the volume and value growth. Similarly, over here, the number of tests performed as well as, the revenue per patient or per test, you can take both of it. That gives you a better idea in terms of your value growth. Now, when you see the number of tests performed Q4 of last year, or not Q4, sorry, FY24 of, versus FY25, that grew by 14%. Okay, so now they're doing 167.9 million. That's almost 16.7 crore tests a year, like record, like really great. So 14% has been the value growth. And if you look at the, sorry, 14% is a volume growth, that is the number of tests performed. And if you look at the revenue per test, that has been up by 6%. Revenue per test is can increase based on two matters. One, let's say if a person is getting, earlier he used to get like, very chotu motu sa test like vitamin D, yeah, B12, which hardly cost like 400 rupees or something. Versus let's say if someone is opting for a higher SKU, like maybe a full body ka, test, that will be like what, 3,000, 4,000 rupees. So revenue per test is a combination of both things. One, let's say if a customer or a patient is moving to a higher category of test, or it can also mean, the company has taken a price hike, in terms of test, which is not the case, because if you look at Thyrocare Technologies, they haven't taken a price hike in this year, they took it last year. So this revenue per test is a more, I would say it is more towards, when the patients are taking, like probably higher package value than let's say a very small amount of test. So good metrics in terms of volume growth, in terms of value growth also. If you look at the patients also, the number of patients that has been using their services, even that grew by 11%. ठीक है, अगर आप active franchise भी देखते हो, even that also has grown by 16%. So overall great. Even the margins is maintained at 32%. And by the way, the sales that I told you, sales grew by 21%. It is both organic plus inorganic. What I mean by organic and inorganic is, this year they have done a couple of acquisition. Okay, they have done an acquisition of Polo Labs, which was a diagnostic center in Punjab and Himachal Pradesh. They had the network of, a network of stores over there, and these people acquired in order to get a presence in that area. Then they acquired Vimta Clinical Diagnostic, which is in Andhra Pradesh, Telangana area. Okay, so both of this, including last year also, they had done an acquisition called I forgot the name, but where they do this ECG ka test, where they come to your home and do it. There was this one company, I don't know, I don't remember what is the name, Pulse High Tech, or I don't know, I think that is a radiation one. But including all of this, but if you remove this inorganic acquisition or inorganic growth that is there, which is coming from the acquisition, in spite of that also, if you see, the sales grew by 19%. So the 19 or 20%, so the 2%, only the 2% has come from, the addition of all this acquisition that is there. So overall, a great set of numbers, very great. When asked about guidance, they didn't want to tell anything. They told they will grow roughly by mid-teens growth in that range. That is what they mentioned. And they also mentioned like, like say, I don't want to like overpromise and, under delivered, that is one thing. But whatever we've been growing until now, the pace of growth that we've been maintaining, we will continue to maintain that. And in the other thing is in terms of franchise addition, because last year if you see, the number of franchises were 9,400 and this time it is 11,000 plus. Okay, so a good healthy addition of franchises also has happened over here, right? Around, I would say, like I think 10 to 11%, 17% of growth in terms of year on year in terms of franchise addition. They're telling it would continue in the same rate even if they don't add, let's say if they add like 1,500 to 2,000 franchises in the next 3 years. If they do so, even that would be great, because when you add a franchise or when you add a store over here, a diagnostic center, it remains unutilized. For it to reach like maximum utilization, it will take around 2 to 3 years. So with the current capacity that they have, with the current network of franchise they have, they can like maintain the kind of growth they've been performing right now. So overall, good set of numbers. Then we go to Dr. Lal Patlabs. If you look at Dr. Lal Patlabs, sales grew 10% both on a year-on-year basis as well as Q4 on Q4 basis. You see that the PBT that is there grew 14.5% on Q4 and 23% on a year-on-year basis. Now, again, I wouldn't take PAT here because there is a one-time exception in terms of, again, deferred tax ka hai, almost. So that is why I'm not taking over here. Over here, if you see, right, like I told you, the patient volumes, the number of tests that is there, that grew over there kitna in Thyrocare, it grew by 14%, versus over here the sample collection that is there, that this grew by 9.5%. 14%, 9.5%. Okay. Revenue per patient in Thyrocare, revenue per patient grew 9%. Here revenue per patient in Dr. Lal Patlabs grew 6.4%. 14%, 14% or 9.5%. Value growth agar aap dekhte ho, again 9% versus 6.4%. So you can clearly see over here who's winning the race. Sales wahan pe 22%, 20 to 22%, yahan pe 10%. Volume growth 14% versus 6%. Value growth 9% versus 6%. And the value growth over came without taking a price hike, versus here they might have taken a price hike in terms of Dr. Lal Patlabs, right? So overall you can see, right, the entire thing. Obviously yahan pe Thyrocare is winning the race. Even for Thyrocare also, they've done so many acquisition because they want to penetrate into the areas that are weaker or they don't have a lot of geographical presence. In fact, somebody had asked in the call ki like, dekho aapke paas to itna cash flows hai, you have a lot of cash lying in your balance sheet, in your reserves and everything. Why are you not giving dividend to the shareholder? Like, why can't you increase the dividend or so? And they told ki like, we are looking, there are, see, obviously we are still a small company. We want to do a lot of acquisition, especially in the northeast of area, in that part where we do not have any presence or so. And we want to keep that cash, because we do not know, right, what kind of valuation that company would be demanding or anything. We would like to keep the cash for that. That is what they mentioned. Over here, when asked Dr. Lal Patlabs, it wasn't that like when asked about how much franchises you're adding, what is the, like where do you like, maybe are you looking for acquisition? It was more like, we will see. It wasn't like a very clear, definitive answer over here, right? Now you can also tell me like, yes, Dr. Lal Patlabs has a much bigger company compared to Thyrocare, because if you look at Dr. Lal, that's around 23,000 odd crore ka market cap, versus if you look at Thyrocare, it is less than 5,000 crore market cap, I presume, right? So obviously there is a lot of difference in terms of base effect, but at the end of the day, it doesn't matter, right? Like you see who's growing the faster, and here clearly you can see in the diagnostic space, Thyrocare is winning the race compared to Dr. Lal Patlabs, and yes, you can tell the base effect is there, and on the expansion, volume growth, value growth, everything is far better compared to, let's say, Dr. Lal Patlabs. So that's that about the entire diagnostic space. Really good set of numbers from Thyrocare, considering the scale at which they're operating compared to Dr. Lal Patlabs. Really good. Just waiting now for Metropolis and that Krishna Diagnostic to see if Thyrocare will continue to remain at #1 position. I know Krishna Diagnostic is not really comparable to the other three that is there, because that works more in the PPP model compared to these, because these people have either their own diagnostic centers or a franchise. Unlike Krishna Diagnostic, it's a bit complicated over there. So I understand that, but still we need to see, right, like what they are up to. We need to really catch up with that. So whenever that result comes, and once the con call is out of both those companies, we will redo this diagnostic center exercise, and we will do the P2P for all the 4 companies. And that's it for today's video. Hope you all have a nice day. Bye.